Euro dollar daily forecast February 13th, FXEmpire.com. The euro dollar pair fell on Friday as the market continues to be driven by headlines out of Athens. The lack of any concrete deal continues to weigh on the euro, and the fact that the pair has been a bit overbought recently will more than likely continue to put bearish pressure on this pair unless some kind of significant deal is reached over the weekend, which is looking less and less likely. Even though various factions in the Greek government seem to support the deal with the Troika. Several ministers are also resigning, about six over the last, say, 36 hours or so. And as such, it does look like there's going to be continued turmoil in the Greek electoral body. The citizens are starting to strike again, and we had some significant rioting in the streets as well on Friday. One has to think that perhaps the Greeks have been pressed to the point where they just simply can't take anymore, and as a result, we may see, even if we do see a deal get put together, we may see it get blown apart later in the year, as there are April elections in Greece, which will more than likely see an exiting of the ministers and the parties involved that voted for austerity. Populism will probably take hold, and as such, they will more than likely vote people into office who will take care of the austerity by simply defaulting. Having said that, this pair is a long-term sell-only pair, and in our eyes, at least until we get above 135. The breaking in the shooting star to the downside is a bearish signal, and now one would look for a move to 131, maybe 130. And if we can get below 130, that would be an extremely bearish situation, as we would have blown through massive support, and we would more than likely head back down towards the low at roughly 126. We like selling rallies presently. Won't buy until we get above 135, as the 50 is just above, and there's just a lot of noise between 132.50 and 135. So we are looking to sell, and sub 130 we become very aggressive sellers.